Stop, Think, Invest by Michael Bailey. Amateur investors can get a behavioral edge over the professionals. Welcome to yourbooksummary.com. Investment professionals are often pressured to outperform an index over a short period, while other investors can practice time arbitrage. This involves waiting patiently for the right time to buy low and sell high. This approach can give investors a behavioral edge. Behavioral economist Thaler observed that U.S. National Football League coaches tend to make irrational decisions in critical game moments or when selecting first-round draft picks. A common mistake investors need to correct is dividing their focus. Research shows that only about 2% of the population can multitask effectively, while the rest delude themselves into thinking they can. Serious decision-making requires attentive concentration. Familiarity bias is the tendency to favor the familiar over the unfamiliar. A Swiss study found that initial public offerings with familiar names outperformed those with unusual names. This bias may also explain why investors prefer companies in their home countries, even though U.S. stocks only account for just over half of total world market value. Only about 55% of a portfolio should be in U.S. securities to achieve rational diversification. Familiarity bias may also explain why U.S. West Coast investors own more technology stocks than the national average. Availability bias occurs when people believe something to be true because they either experienced it themselves or heard it in the media. This bias can disproportionately influence their judgment. For example, a bad traffic accident may lead witnesses to believe that cars are more dangerous than they are. Individuals are also subject to loss aversion, meaning they are more uncomfortable with losses than pleased with gains. This can result in volatile financial stocks trading at a lower price-to-earnings ratio than more stable consumer product shares, indicating less demand for the riskier sector. I hope you found the information about Stop, Think, Invest by Michael Bailey. If you're interested in learning more about the book, stay tuned for the next part of this series where we'll dive into the next section. Thanks again for watching, and I'll see you in the next video.